Folks, it looks like we have more and more people pushing this idea that housing unaffordability is going to lead to a price crash. It looks like the Kobayashi letter has been sent to me a couple of times this morning, really talking about mortgage payments as a percent of income being at such high levels that home prices must fall. I want to once again discuss this. I want to highlight we've been here before. And most importantly, I want to implore you to go to my website, onerentalatatime.com. In the 8th box, right, there's 4 boxes on top, 4 on bottom. The one on the lower right says 54-year spreadsheet. Do yourself a favor, go there, download the spreadsheet. It is free. And look at it. Because even the Kobayashi letter highlights we've been here before and it was the early 80s. Folks, I want to challenge this notion with facts. Not emotion, not fair, not woulda, coulda, shoulda, none of that stuff. We've been here before. So let's put this in scale and then we will talk about reality. So as of today, the Kobayashi letter highlights that we are at 41.4%. That is the mortgage payment as the percent of income. This is also, we should note, down from the recent peak of 44.2. So, it's about 8% lower than the recent peak. And of course, you and I both know what's happened to home prices over the last 12 months. Last reading up, 6%. But again, this fear and doom and nonsense has to stop because it's not helpful. So, based on the Kobayashi letter, I pulled up the 54-year spreadsheet, which I ask you to do on your own, and I looked at 1981, 1982, 1983, and 1984 because if we've been here before, you should be able to ask yourself, what happened? Could something be similar? So this is what happened. First, 1981. The worst year for housing affordability, if you look at the chart. Home prices went up 6.1%. 1982, relatively speaking, a horrible year for housing, went up 0.4%, so less than 1%. 1983, quite the rebound. Maybe a little bit of makeup. We had 8.9% home appreciation. And then finally, 1984, just to round out the 4-year period, home prices went up 6.1%. So again, we are currently at 41%. In the early 80s, in the Kobayashi chart, we ranged 51 to 58%. So one could say, and be accurate, we were 30% worse in the early 80s. And yet home prices went up somewhere between 0.4 and 8.9%. So this nonsense of pegging home price crash to this, percent of income is clearly nonsense. But there is value. And of course, what I've been bringing you now for 2 years is, hey, doomers, look at transactions because that is where the pain happened. Here we go. So in 1980, we did 3.5 million existing home sales. What did we do in the most unaffordable year on record? We only did 2.8 million. So folks, transactions fell 20%. Transactions crashed 20%. But folks, it gets way worse. Remember 1982, home prices only went up 0.4%. We went from 2.8 million transactions in 1981 to a cycle low of 1.99. So folks, in the span of 2 years, let's call it 3 years, we went from 3.5 to 1.99. That is almost a 50% crash. in transactions? Folks, the answer has been in the spreadsheet forever. When people are trying to scare you, purport doom, get clicks, and talk about prices, they are charlatans. They just don't understand true economics. What that really means, when you are at high payment to income, that means less people get a yes answer. That means less transactions. So let's just round this story out and we will move on. 1983, again, that was the year that home prices went up 8.9%. That was a cycle high of these 4 years. Transactions rebounded. They bounced from 1.99 to 2.7. And then a year later in 84, we went from 2.7 to 2.8. So again, transactions will be impacted, which of course is something I've been reminding you for 2 years now and have been right, which none of those doomers seem to give me credit for, but hey, that's okay. So let's talk about some things that are going on in housing. There's been a lot of data this morning, Resi Club, a lot of stuff on Twitter that I wanted to talk about, or X. Let's talk about what cities have the largest percent of new inventory, like new construction to active inventory. So what does this mean? So think about your buy box. It has 100 listings. If 20% of those are new builds and the other 80 are existing, your metric would be 20% in what I'm about to show you. So the market with the highest amount of new construction in the active listings is Ocala, Florida, with over 20%. So 1 out of 5 active listings in Ocala is a new build, new construction. Next up, Myrtle Beach, South Carolina, almost 15%. Augusta, Georgia, also just shy of 15%. And then the U.S. average is 6.5%. So the U.S. average is 6.5% of active listings are new construction. That's a national number, with Ocala, Myrtle Beach, and Augusta all being roughly 15% or higher. So what should you do with this? I think this is an interesting metric. I think it is something that you should look at in your market, in your buy box. You will really start to see if there's a higher percentage of new builds, that will be competition for existing home sales. So I think that is an interesting thing to look at. Another thing to really talk about is home builders. These are the largest public home builders. Specifically, I noted KB Home, Lennar, and Pulte in this particular thing. Which of these home builders have had the biggest price decline since the peak? So again, think about the peak being, I don't know, what was it? Q3 of 2022? I forget, but you get the point. How many of these home builders have seen their average price fall? Well, it turns out that Lennar has had a 13.2% drop in median home price. KB Home and Pulte Homes, roughly the same. KB Homes, 5.4%. Pulte Homes, 5.8%. The question that we should talk about, we should investigate, instead of purporting doom and fear, is why is Lennar down 13.2% from the peak just 2 years ago? I purport, based on information that I have shared with you over the last 6 months, that Lennar pivoted first. And I believe Lennar pivoted in a big way. What do I mean by that? We have talked about Lennar building homes that are smaller. We have talked about the 661 square feet home somewhere in Texas. We've talked about the 995 square foot home, I think in Sacramento or thereabouts. I think what Lennar has done is they were the first public builder to look at their build plans, and they pivoted first to go smaller, to build more affordable homes. And if I am right, that is why Lennar's price, average, median, has dropped 13%, because they're building smaller homes. Remember, folks, a drop in price does not mean a drop in profit. That does not mean that. Because again, if they're building smaller, they could potentially be making more profit. The other thing I wanted to do was look at these 3 home builders and actually do a bigger comparison from January 2020 to today. That's interesting to me because that's pre-pandemic to today. So what happened? Interestingly enough, KB homes up 24%. So the average KB home is up almost 25% in 5 years or 4 years. Pulte Homes is the big winner, up 30%. And then once again, we have Lennar pulling up, in this case, the rear at 6%, only up 6%. But again, I would argue, I would try to look inside their 10 Qs. Has Lennar's average home size fell since January 2020? So for example, if Lennar's home size is down 10%, but their price is up 6%, that is a pretty powerful combination. So I thought that was pretty interesting. Folks, the July Fed meeting is going to be important. I think you and I have talked quite a bit about the Fed is not raising in July. I believe that is a pretty well, I think most people believe that, no rate cut or rate increase in July. But here's a big question. Will the Fed, either in their press announcement or when Powell answers questions, will they officially put the potential of a September rate cut on the table? Now, you and I should not expect the Fed to be black and white. You shouldn't hear things like, yes, we will be cutting in September. It will not be that declarative. But will they put the idea of a September rate cut on the table? The reason that is important is because the market will react first. If the Fed clearly puts a September rate cut on the table, you will see the 10-year, you will see mortgage rates react almost immediately. And again, remember, folks, we do not have an August Fed meeting. That is their yearly Jackson Hole symposium stuff, whatever that's called. So the next meeting after the July will be September, which will be the last meeting before our election. So I think the July meeting, frankly, is critical. Will they put a September rate cut as a possibility? Something else I wanted to look at again is, where have home prices risen the most since January 2020? Actually, March of 2020. Again, shout out Resi Club for all of these. Edwards, Colorado. Never heard of it, honestly. Don't even know where it is in Colorado, but up 82.2%. I hope all of you own real estate in Edwards, Colorado. I hope you all bought it in January of 2020. 82%, that's almost a double. Crazy. Next one, I hopefully pronounced this right, is Cleviston, Florida, up 81%. Jackson, Wyoming, 80.9%. Kalispell, Montana. Wow. I would not have guessed Montana is on the list, but they are. 79.7%. Finally, Cedartown, Georgia at 79.2%. Folks, if you don't remember, we had a couple of amazing sessions in school over the weekend. We had Ty go deep on creative financing, answering any and all of your questions. We also had Millennial Mike talk out-of-state investing. Some of you have joined school and missed those. Those are now available. So if you pull up your school, one rental at a time, if you go to Classroom, you click on Classroom. If you scroll down to the second line, you'll see one that says, there'll be a thumbnail that says special guest. If you click on that thumbnail, you will see a long list of 15 or 20 millionaire talks. And the last two will be Ty and Millennial Mike. And shout out to you folks that have some rentals out there in Montana. So congratulations. You've had a nice run of things. What else we want to talk about? I think that's it. So again, folks, remember, join school this week. What do we have for you? Wednesday night, you have the accountability group. Again, shout out old guy REI for doing that for us. He leads those, and Frank does an amazing job. Last one went over 3 hours. If you want to get in a community, you want to ask questions, you want to do all of those things, join school once a week. Once a week, we hold an accountability group. I shouldn't say we. Frank holds an accountability group. You can go join those, ask questions, help others. Accountability groups are amazing because not only do you get value, but you might be able to help someone else. That is what they are all about. Go ahead and join that. We also on Thursday are going to be talking to the one and only Henry Washington from Bigger Pockets fame. Yes, if you are in school, you will be able to ask Henry questions. And then on Thursday, also, you will get the one and only Lance Lambert. This is a session I've been looking forward to. I want everybody inside school to bring your buy box, bring your information. Let's have Lance dig into the data about what is going on in your market. So again, lots of value coming in school. Lastly, folks, we are a top 950 school community, and that is because of you. Again, the algorithm behind the school ranking is twofold. Yes, students, but more importantly, it's interaction. The school algorithm works on interaction. So if you are a part of school, introduce yourself, post your buy box, engage in the comments. Let's really get this up. We are on our way to 200 students. Frankly, I hope we are there this week. It is time to join. It's $20 a month. We're giving crazy value every week. So hopefully you see the value there. You join. Let's get the comment section questions going. So folks, take care of yourself. Have an amazing day. Like, subscribe, comment, and please keep doing the work. Bye.